So it's been a while since I did a video about my Bollinger Universal strategy. The strategy I trade on a full-time basis, my main core strategy. So today I thought I would be taking a look at some trades and show you some examples of how not to trade it and then how to trade it right after that. Well, that was in the charts and let's go right in. Okay, so here we are on AUDJPY, one of my favorite pairs to trade this strategy because it's going sideways quite a lot and we have these ups and downs moves that are very clear on this pair. So the first thing I want to do here is I want to highlight how I look at my zones to take these setups. Then I'll highlight some of the common mistakes people make. And then we'll talk about how to trade it the right way. And I'll show you a cool trade example of a few days ago that would make a lot of sense to take and that could make you a pretty good income if you do it right on a weekly basis. So when I go look at my zones, I try to strip out everything I can. All the indicators I have, all the little tools I have, I'll take them off. And I'll just add this tool that is called Pivot High Low. So if you just search in here to the trading view indicator, you're searching for Pivot High Low. You'll come across this indicator here that is a Pivot High Low indicator. And what that does is showing you the highs and the lows in the market, which is kind of useful for looking at the zones. From there, I look at my zones. And looking at zones on a bigger time frame, especially a weekly chart here. These zones are often going to be round numbers. And that's just how it turns out. So if I can place my zone somewhere around here, it's around the 78 level, which is a round number. Here at the top, 97. See how this fits exactly as a round number at that level. If I put a zone somewhere around here, it will be a middle zone, like an intermediary level, which turns out to be 89.5 or so, which is also a good number. If I go and put a zone that is somewhere over here, because we have these price touching here in the past, 74, 71.8, 74 here, which is a bit extreme, 72, roughly in the middle. I put my zone right there, and you see we're very close to, again, a intermediary zone, so a 72.5, which is kind of close to being a round number. Not quite yet, but it gives us a good idea of where price bounced in the past. And now we can trade based off these zones. So usually I'll look at my zones on a weekly chart, place trades on daily charts and 4-hour charts. I've done the 1-hour chart a lot before. I kind of want to stay away from it now because it takes a lot more time. And I have a busy schedule doing my pilot license now, so I don't really have time for that stuff. But if you have time and if you want to trade the 1-hour chart, it's also a great time frame to trade. So 4-hour is where we'll look at for this video. Now you'll see I have a custom built indicator on TradingView that gives me my setup with a very nice triangle here. So I don't have to really kind of pay attention to the price, the breaks, the Bollinger Band. I just look at this triangle and I know if I have a setup to enter or not. From there I have a few more quick rules that I go through. And the first one is I want to make sure I enter the price below the low of the engulfing candle. So in case you didn't know, this setup is basically, very simply, a break of the Bollinger Band, a engulfing to come back within the band, and that makes me believe that we'll have a reversal in the market. We'll have price coming back down the other way, and so I would like here in this case to go short. But I want to make sure I have continuation. I want to make sure price will actually follow through on that move. And the first rule is if we don't go below the low of the engulfing candle, on the next candlestick after that engulfing candle, I don't want to take the trade because price will likely reverse. In this case, if we just enter the close right here, price reverses and hits the stop loss right away after that. We don't want to be in those trades. These are bad trades. They're trades we could easily avoid by just entering below the low of our engulfing candle in that case. If you have a bullish setup, we just enter above the high of the engulfing candle. Very simple, very small rule, but makes a big difference in your drawdowns. This trade here will be a trade I will skip because we don't have that visible continuation in the market. We don't have that price showing us a bearish candlestick here, showing us we'll actually go back down and reverse well in that market. So I would want to avoid that kind of trade. Next will be this trade right here. Now, this is another trade we'll have to skip. Another common mistake I see people make with my strategy is they enter all these setups they can see with the triangle in the chart. But this one is one where price actually closes, you can see beyond the middle band of the Bollinger Band. Now, what does that tell us? That tells us that there's likely to be not much room for profit on the other side of that middle band because price should, on normal circumstances, fluctuate between the lower band and the upper band, okay? And it's going to go outside sometimes, going to push it a little bit sometimes, going to go up a little bit more sometimes, but we cannot really predict that. We have to predict that price will stop at the other side of the band. That's what price will do under normal circumstances. So when you have to enter above the middle band, in the case of a bullish trade, our stop loss is all the way down here. That gives us a very big stop loss and not much room for profit in that case. in this particular market, price ended up going higher. But look how choppy that is, and look how long this took to even just reach a one-to-one target. This is one-to-one. You have to wait all the way down from price going up and down, nearly stopping you out, then price going back up, then price slowly going back up, but being choppy all the time, and then finally reaching one-to-one. And even then, it's very choppy. Now, don't even think about reaching 2-to-1. That would take a long time. Plus, it would likely not be worth it to wait for that trade. If I go here, this is our 1-to-1 target. That was pretty accurate on this one. And then our 2-to-1 goes all the way to here. Now, sometimes I reach 3-to-1 on these trades, but that is not the particular example here where I'll reach 3-to-1 with that kind of setup. This is only going to lead us to maybe a 2-to-1, but even then we kind of roughly didn't make it. And we don't want to target 3-to-1 on this one for sure, because that would be like really hard to reach. Be careful with these trades when you have to enter beyond the middle band. They are usually going to be trades that don't move enough, or even if they move a lot, they don't move enough to make it worth it and to get you to make a good profit on them. So I prefer to avoid them, kind of reduces my drawdown quite a bit, and I have more peace of mind that I actually enter good trades instead of these trades that will take a long time to reach my take profit. Right, so these are the two common mistakes. Now let's have a look at a good example that I took a few days ago on this particular strategy. Same thing, same principle, but a good one. By the way, all these trades, when you take them, should be in line with some kind of zones. We've done our zones on daily chart. We should respect them to take our trades. We should look for reversals at the top of our resistance or at the bottom of our support. This is where we have a good idea of whether price will move in our favor or not move in our favor. We have a good trade here on a daily chart. Of course, it's a bit tight because we have a big candlestick and we have a really big stop loss, but the one I want to show you here in this video is the one on the forward chart. So we can stick to it. You can see our zone is right here, and we have this engulfing candle forming right at the closed Bollinger Band. You can see our resistance area is right here, and we have price breaking the Bollinger Band, then coming back inside with a big, strong bearish candlestick candle. Good sign we're actually going to go back and reverse in that market. Our entry will be below the low, which was triggered pretty quickly on next candlestick. So we don't have to wait and see price go against us because we have a visible here continuation on the downside, which is good. Stop loss will be about the high. And this is where we can target our 2-to-1 or even our 3-to-1 because now we have a good signal. We know it's strong. We know we have continuation that's possible here to the downside. We know we have room for profit because we have enough space to reach the outer band of the Bollinger Band. So we can start to be more flexible with our targets in that case. I'm going to go here, and I'm going to make this a 3-to-1 just for this example. In normal circumstances, 2-to-1 will be plenty, but 3-to-1 might be even better. Here we are, we have 0.5, and this right here is 3-to-1 reach in this market. See how we even had a nice wick that went even beyond that, but even if you didn't take that wick, you still have plenty of room in that market to reach your 2-to-1 or your 3-to-1 target. Now, this kind of stuff I like to trade. I like to look for strong setups, and these setups we've shown before, except this one, which might be good. The other ones are not that strong. Okay, the other ones were set up that I would try to avoid. Either when you have to enter beyond the middle band, or when we don't have a clear sign of continuation in the market. So I hope you can take away something from this video. Hope you can look at better setups, more reliable setup in the market based on these tips. Hope this is useful for you. If you find this useful, give a like to the video. I would really appreciate your comments also below. If you have any questions or anything you want me to cover more in future videos, I'll be happy to go over that. Check out this video next to learn more about how to trade the way I trade, the strategies I use. And I'll catch you back here in the next video pretty soon.